How do you do, ladies and gentlemen? Following on from last week's blog, I have been asked by several readers to do some articles on Bitcoin and cryptocurrencies. But first, let me try and clear the decks. After all, what sort of world are we entering, and how do cryptocurrencies fit into that world? Over the years, I've also had a lot of people ask me about preparing for the future because everything is so uncertain. In response to such questions, I started producing a monthly magazine which I called The Big Pension. I ran that for a couple of years but stopped after I'd done a lot of research on Bitcoin. I simply said in my last issue, buy Bitcoin and forget it. That will be your pension. Those who listened to me back in 2015 and maybe even put just £1,000 into the coin will now be sitting on a substantial sum. Unfortunately, very few people listened to me back then. That £1,000 would have bought 5 Bitcoin, which would now be worth $250,000, and in 5 years' time could well be worth $5 million. But those of you who didn't subscribe to my tip sheet and didn't load up on Bitcoin when it was cheap won't really want to know that they missed a great deal. But the thing is, if you don't have any yet, then it's still worth getting at least some Bitcoin in your portfolio. On the other hand, the current view is that the best way to prepare for the financial reset that is coming is to buy gold. There are several snags to that idea, which I'll go into later in this series. In fact, there are several standard attitudes to coping with a particular disaster scenario. First, let's backtrack a little. Are we heading for any kind of disaster? If not, then there's no point in preparing for it. I went into the local shopping mall last week. That's the first week in March 2021. I haven't counted the stores there, but there are certainly somewhere between 60 and 100. The whole of the top floor was cordoned off, so all of those establishments were shut. If we ignore the mobile phone shops on the ground floor, of which there seem to be rather a lot, I was able to count the number of open shops on the fingers of just one hand. That's insane. What that means is roughly 90% of all shops are shut. The question has to be asked, who's paying for all of this? If you live in Spain, try walking down a high street. First count how many shops are shut, then count how many are boarded up because they've closed permanently. Now add those people not currently working to the existing unemployment figures, and what do we get? The youth unemployment figures in Spain must be close to 75% at the moment. Does anyone think that is sustainable? If you live anywhere near a tourist zone, you will have noticed that every restaurant is shut, every hotel is shut, and all amusement arcades, theatres, any form of entertainment, they're all closed. There are no tourists, so no money. So 90% of the population is out of work and on the dole. We are now into the second year of this insanity. Can anyone with a straight face say that so much money will have to be printed to pretend that everything has been fine for the last 15 months and that this new money will have the same value as the old money? Well, interest rates have already started rising in the USA. Commodity prices are leaping ahead as well, and the value of the stimulus checks and bond purchases, certainly in the USA, is into the trillions. Whole economies are crashing. In a previous blog, I have mentioned that places like Spain, France, and Portugal, and to a lesser extent Italy, Bulgaria, and Turkey, are imploding because a large part of their economies depend upon tourism. Well, there isn't any. Spain is probably the worst hit. clearly there will be no Easter tourism. The big question all across southern Europe is, will there be any summer tourists? At the time of writing, there's a distinct possibility that there won't. The criterion for reopening the borders to tourists will probably be the concept of herd immunity. That requires 70 to 80% immunity either from previous infection or from immunization. At the current rate of immunization across Europe, that figure won't be reached in time for the summer holiday season. That means countries that rely upon tourism will be in such an economic hole that I can't see how they're going to recover without massive financial assistance. And with the various European countries arguing about who pays for what, I can't see an easy way to solve this problem. There are ways to deal with this, but the easy way is for a country to print money. In the short term, that will get the economy up and running again, but it will also lead to a devaluation of the currency. Since this is a global problem, it will mean a race to the bottom. Those who devalue first will gain a competitive advantage. That advantage will then be diminished once other economies catch up. Or do I mean catch down? Devaluation equals inflation. There will be winners and losers. I suspect that countries like Australia will do rather well out of this because the place is rich in commodities. The USA may well come through reasonably unscathed due to the food that is produced from their vast prairie lands and exported. Maybe Brazil will also be a winner. This is where the EU is once again at a disadvantage. Each country does not have the ability to print their own currency. This means that one ends up with some countries effectively bailing out other countries. That is a recipe for further discord within the Union. This is not going to end well. The same metrics work against China, as they need to import commodities to keep their factories producing, and they need to import food, especially following the widespread floods in southern China. Sadly, there's one other rather awkward metric in all of this: the rise of the robots. On the one hand, they will do the work and make the money, but maybe in the future we will each be assigned a robot at birth and live off the productivity of that robot throughout one's life. One thing is sure: people will start to become redundant. They will start to be a nuisance rather than an asset. I will cover this point in more detail in a later blog. I have long maintained that the place to live is where there's a small population living in a high-tech economy. This is why I think that socialist economies are not the way forward, which means the current move towards socialist ideas is going to lead to rather a lot of countries suffering much lower standards of living going forward. In fact, such political systems will lead to countries going backwards. So, what is likely to be the best way to cope going into this mess? The usual fallbacks in times of disaster are cash, land, art, gold, silver. Will they be adequate in today's world? And of course, what about the new boy on the block, Bitcoin? Is Bitcoin likely to overtake gold as the last bastion against the assumed fall of fiat currencies? Okay, I've raised rather a lot of diverse matters which need a hefty book to discuss properly, but let's break down the issues and see if we can come to some sort of a view on how to chart a passage through this mess. Here's a list of the main problem areas we need to plan for. 1. Money printing, which will lead to inflation. 2. Digital money, and of course the huge downsides that come with that. 3. Politics. Here, the main problem seems to be federations versus the small state. Small states seem to be making a lot of noise these days. 4. The advance of quantum computing and what that is likely to do both to business and to personal security. 5. The advance of the robots. What about the loss of jobs and the need for a new philosophy of life? A lot to cover. I have listed art as one of the usual hedges against falling currencies, but the art worth holding usually costs rather a lot of money, so I propose to leave that aside and concentrate on the pros and cons of holding cash, buying and holding land, buying and holding gold and or silver, and stocking up on Bitcoin. Since these blogs are a spin-off from the Unique Property site, I will start with land as a store of wealth. Next week, I'll have a look at what is likely to happen to house prices and whether one should be buying now or waiting. I'll also give a list of places where you should on no account buy. I'll also highlight the kind of timeline you should be looking at to work out when is a good time to buy and when to sell. In later blogs, I will look at the pros and cons of holding cash and whether to go into precious metals or even Bitcoin. I will then develop that and look more specifically at Bitcoin and cryptocurrencies. Okay, folks, that's it for today. Please don't forget to press the like button down there for me. I'd appreciate that. And see you next week.